Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES failed at Friday's initial resistance zone and put in a pretty decent pullback, which shows a lack of strength, at least on the smaller time frames. Overall, the bigger picture bias continues to be bullish. Looking at the other markets, Russell is holding up fairly well, and it was performing well on Friday and leading on the upside. So at this point, heading into the open, ideally, we'd like to see ES holding above 84.5 to 86.5, because at this point, if it continues breaking down, then it just tells us that there is a disconnect between the S&P and the Russell, and this time around we may not get the same level of buying off of the support zone at 78 quarter to 80.75. Now that's still a valid zone, and if we're not seeing strong downside momentum, and as long as we're not seeing extreme weakness on the advanced decline, it's a zone that can still be traded, but it's going to be second time down into that zone yet again after testing it pretty thoroughly on Friday. And the more times you test any given support zone, the weaker it becomes, and the less likely that we can get a reversal off of it. So heading into the open, the bias can be bullish above 84.5 to 86.5, but ideally we actually hold the pre-market support. And as long as we can hold 84.5, 86.5, the buyers can still be in good shape, and we can get a move back up towards the 93.5, 93.75 previous VPOC and close, and 96.75 to 99, which is key resistance on the upside. Now, if buyers can take out 96.75 to 99, that would confirm that buyers are now back in firm control, and from there we can go back up to 03 quarter to 05 quarter, and possibly 0875 to 1075, depending on the level of volume and momentum we're seeing in the market. So as you can see right now, with S&P trading within a balance, we have to be fairly nimble with our directional bias, but not lose sight of that larger time frame structure, which continues to be bullish. The issue with the larger time frame structure today is that even if the market put in a deeper pullback, even if we broke below initial support, that overall bias would continue to be bullish. And that's why, as day traders, we have to be in tune with not just the bigger picture, but what's happening here and now. And, what is the short term or the smaller time frame bias. And right now, we can see that, sellers have been more dominant in the overnight session. The market has pushed into a support area. Responsive buyers have been active there. So now we just want to see a continuation of that buying. We want to see buyers continuing to step in. And that's why it's important that ES actually hold 84.5 to 86.5. And if it can do that, then it opens the door for a reversal and a move back up to initial resistance and possibly towards the upper resistance areas. Now on the downside, if we get a liquidation type move where the market breaks 84.5, 86.5 on strong downside momentum and excessive weakness on the advanced decline, and Nasdaq is breaking down as well, then we'll have to be careful at 78 quarter to 80.75. Below that, we have an open gap at 73.75. Now, as we push lower, below initial support and below Friday's low, responsive buyers can still be active at the support areas below. So 73.75 is an area where they can be active, 72.5 to 73.75, 69.5, and then finally, the ideal location is at 64.5 to 66.5. That's a support zone that can result in a pretty decent intraday bounce or even a bigger reversal on the larger time frames. So even if we continued pushing lower, that bigger picture would remain bullish, and because of that, we can still get a reversal off of one of these support zones below Friday's low. So to summarize, heading into the open, we're still giving a bit more edge to the buyers, but with the understanding that the market is trading within a range, within a balance, and if we are seeing excessive weakness, then we do have to be flexible and nimble enough to flip our bias in real time. Because as day traders, you can trade long and short on the same day a lot of times, and that is actually one of the sources of edge for day traders, is that they can position themselves and flip their bias fairly quickly. So that is something that could come into play today. depending on how the market behaves off the open. Russell, if we can get a continuation move in TF and break above Friday's high, then most likely ES and NASDAQ will start moving higher as well. And that bigger picture bullish bias can come back into play and we can get some decent buying. So off the open, we're still a little more bullish than bearish, but with the idea that if in real time we're seeing excessive weakness, we should be flipping our bias and waiting for better location then in order to go long. So those are the main ideas heading into the open. Let's see if the buy side can hold ES above 84.5 to 86.5. That'll help define the bias on the day, and we'll take it from there.